following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Richard Bach. To bring anything into your life, imagine that it is already there. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 86, Nasdaq's up 25, S&Ps are up 10. Gold contract flat at $1,189 an ounce. Silver flat at $16.70 an ounce. Both of those were up earlier, folks. We do have volume on the way up. They're trying to fill the gap left over from last week. Platinum, $1,103 an ounce. You got copper trading out at $271 a pound. Light sweet crude flat at $60.20 a barrel. Bonds. Bond market's getting wrecked out here. You have the 10-year down 25 ticks, 126.29. 30-year off 2 full points and 6 ticks at 153.14. King dollar up 487 ticks, trading at 97.47. The euro is down 44 at 109, and the yen is up 66 at 124.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Let's go take a look. We'll put the SPY up here. So what we have on Friday, folks, is this. Friday, we go slightly lower. You have an expansion of volume on the way down. Huge expansion of volume, by the way, too. This morning, you get a rejection of lower price. We get down to 210.62. Right now, you're trading out at the 212.24. We went downtown with the 124 million. You're basically hanging tough up here at 212.26 with 65 million. I expect what you're going to see into the close out here, folks, is that you'll see a slight sell-off. Nothing heavy, but I do expect that when we take a look at the SPY right now is trading at that 212. We can get about a 211.79 out of it. Where I'm going with that 211.79, by the way, is at about 12.20 today. If we look at this intraday, what you'll see is that there hasn't been any juice on the way back up, but 12.20, that spike up there is fairly decent. NDX 100. What do we have? The NDX 100, same type of setup inside the NDX 100. If we take a look at the Qs right now are trading at the high of the day, 110.68. Bottom line, same type of setup. The Qs actually have been strong, but they came down on Friday, and when they came downtown, they came down with 30 million shares. You're going back up with 20 million. If we look at this and we actually look at the NQs themselves, what you're going to see inside the futures is this, is that the NQs are hanging up here at a price point of 4,533. This morning, you talk about a fast turn. You got a fast turn down. We were up at the 38 area, the 4,538. Went sideways for a bit. As soon as the market opened up, they blasted it from a 4,536 down to 4,486. What I expect you're going to see into this close out here is that we're going to get some type of selling. You know, we'll see whether it gets into this 4,522 area, but that's a 4,522 area would be a normal area as this market is coming in for a close. We got to take a look at the gold contract. What do we have with gold? Okay, so gold had the price spread, had the volume characteristics, and couldn't hold price. So we had with gold is this. Gold gets to a price point today of 1204.70. We did volume of 158,000 contracts. Now that's a nice number. Bottom line, though, it pulls back, it couldn't hold price. What does that say? When you start pushing higher, folks, and you're pushing higher with volume, you're going to be right back up to that level, and you're going to be up there pretty quickly. So I expect what you're going to see with the gold market is that we're going to be right back to 1204.70 quickly, meaning tomorrow, next day. The GLD, if you want to see the correlation inside the GLD, it's pretty cool. The GLD, what it's done out here today is this. So the gap down from the downdraft on the 26th of May, we had the GLD had closed the prior day, what was actually a Friday. It closed at 1:15, opened the following Monday at 1:13. We had done volume out there of price 5.7 million. We've already done 5.7 million. So what you're doing there is this. You're pushing into the gap with volume. That's what it's going to take in order to get up into higher price. Now, let's go over to the bond market, because the bond market, folks, is squealing out here big time, too. We take a look at the 10-year first. 10-year bond, we've done U.S., we're on, okay, I'm on the TYU5. So we rolled over in the bond market. 10-year bond, okay, so the 10 years down 26 ticks. We have done 1 million contracts. And it looks to me, number one, that you're not only going to go after the lows. The lows that we're talking about is 125.13. More than likely what you have here is an ABC structure on the way down. So if we look at the TLT for a second. Now, the TLT is the 20-year bond fund. People like trading it. That's pulling back 150. You have 7.4 million shares. Now, that's going to need more shares in order to break that swing low. But that swing low is hanging out there at 118.13. It's going to go after that swing low. Real key is it going to take that swing low apart. And what that's all about is that the Fed might not raise rates, but guess what? The market's raising rates. If you need a mortgage out there right now, if you want to refinance, go do it, because you're still dealing with 2.19 in the 10-year, which gets you a 3.8 to a 3.85. That's how that baby would be setting up. We take a look at some of the inside the NDX 100. Now, this is what's moving the market out here, folks. Inside the NDX 100, you have Altera. Altera is the largest mover inside the 3 Qs. Altera right now is up 285. American Airlines, that's a dead cat bounce. That's up $1.90. You get Dish Networks is up $2.44, and you get Intuitive Surgical is up $16. Bringing it downtown, Broadcom is down $1.38. You got Wynn Resorts down $2.10. Mondelez is down 73 cents, and Intel is off 56 cents. Let's go to Tom in Dallas. Hey, Tom, what's going on?
Hi, Tom. How are you doing?
I'm doing great, man. You having a good day out there?
Wonderful.
Cool, man. So, what are we going to look at?
I've been trying to get into get some put spread on WYNN for a week, and it's just not letting me in. Where's a good place to look for that to bounce and then get in short again?
You got a long time to wait here. So Wynn has gone one way, folks. Wynn has come down from $247 to $98, literally. The only time that it has had 2 sideways moves. The first sideways move was from the 3 months from September over to December. You know, the way this is trading right now, it looks to me like it's going to slice and dice the $82. You know, there's no mercy on the stock, man. You know, and yeah. I wouldn't do it yet, because you're right that you need a bounce in order to do that trade, man. Do you know what I mean? Because it should bounce, but guess what? It's not. And see, what you have here is this. Watch this. When I put this up on a longer-term basis, what you're going to see, folks, is that the amount of folks that are underwater on this is extraordinary. You know, you can go all the way back to December of 2010. Anyone who has bought this since December of 2010, and we're dealing with June of 2015, is in a losing position. That is hugely dangerous. The reason being is that people will hang in there, and they just throw it in. You know what I mean? So.
Maybe we're looking for probably a high volume drop day to start a little bit of a bounce to see how far it's going to bounce up.
The first, my take on this is that your first place that you might get something is like 4 points lower, 94.63. Where I'm going with that, Tom, is that's the low. It's not the low of the year, but it's a low of 2011. In October, and there's some big volume there. That should slow it down, man. Do you know what I mean? Cooking, brother.
What's the short interest?
Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back. Dow's up 84. Nasdaq's up 25. S&Ps are up 10. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Right now, we get the Dow up 72, Nasdaq's up 23, S&Ps are up 8.5. And if we go over to the S&Ps first, this is going to be an exciting close, folks. Okay, we had the open that was exciting in a huge way. They just trashed it in about very fast. We had the NQs go from 45.36 down to the 44.86 ASAP. The market's been flat since basically, noon. Actually before that. The bulls made it all the way back, got it all the way up, back up there. Now the real question is going to be, okay, what happens into the close here? And what's going to get intriguing, there's no doubt, is that the bulls have been able to basically keep this market higher on a continual basis. Every sell-off on the way down comes back, is met coming back with buying. The acceleration on the way down has been much larger than the slow movement on the way back up. Right now, what we have is that the S&Ps got to 2117. That was much higher than this morning. We've just came back inside the 2115. So the number that you want to keep your eye on is right where we are right now. If the bears can get it underneath that 21 to 15. With some velocity, you'll get down to that 2112 to 2106 pretty quickly. And that's what's intriguing here is that that's exactly what the DAX did this morning in Germany, folks, okay? They got it going. They got it downtown. They got it going top side. And coming into that close, what they did is that they basically just evened the whole deal off, meaning that it was up, down, all around, and then they just split the difference. And we'll see if that's, in fact, what we're going to do coming into this close out here today. Some of the Dow stocks out here, you get Big Blue up $1.12. We got Boeing up 117. Oxy is up 106. If we go take a look at the XLE inside the large oil and gas companies, what you have with the XLE is that she's hanging flat. She's at 78.38. We came down. Friday, you came in with some real juice, meaning on the way down. The XLE had traded from the 78.80 to the 78.20. That looks to me like you're building cause to try to get into this lower swing point. That lower swing point being the swing point from going back to the March level. So we'll see where that shakes out. That is 73.82. If we go over to the XLF, we look at all the financials. What you have with the financials out here is this. The financials right now are hanging XLF. The financials are trading at 24.68. Now, the financials haven't been able to get to the high. The high inside the financials, the past 6 months out here, is 25.14. What's unusual is that, why can't you make the high? Well, bottom line is that we got, 2 weeks ago, we got up to the 19th. On the 19th of May, we got up to the 25.06 level. We'll see how this does shake out. What you do have is that the largest weighting structure now inside the financials is Berkshire Hathaway. That's the big number out here. Let's go over and we take a look at how we're coming into this close. So what we have coming into it, this is the first time that we have any type of selling at all, NQM, inside the actual indices. And this is, so you're at 325, you get 35 minutes left. We'll see if there's any juice to the downward side. If you just get, the NDX right now is up 20. If that splits it in half, what you're going to have there is that you're going to have a failure, at those highs. We didn't reach the high, but that'll be a failure. It'll end up with another doji. So if you're into candlestick charting or council charting, that's another indication that it wants to go lower. The NDX, however, has to close to change the whole trend. It would have to be under 4476. So the NDX itself has a long way to go down in order to change that whole trend. We've been up over that level since the first time it broke topside was on the 23rd of May, of April rather. It failed again. It goes back upside again. You know, we'll see whether it can hang up there or, in fact, it gives it up. Bottom line is that what I do expect is that you're going to give it up. The resilience of the market, though, there's no two ways about it. It's been hanging at these highs and hanging at these highs with dramatically lighter volume. What hasn't happened is this. The IBB, okay, which is the biotech index, hasn't fallen apart. And the IBB would be the index that would take the NASDAQ composite apart. If we take a look at the IBB, what you're going to see is that that's trading at 365.54 right now. That index has been a rocket ship. It hit a low out here today of a price point of 360. You're at 365 right now. Bottom line, it's hanging up there. Now, I do expect you're going to see some selling up there. Why? Because what we have had is this. When the IBB goes down, it has been coming down with 4.8 million shares. What you have out here today is that you're going higher with 1.1. So it's like, oh, really? So people walk in the store. There's no one in the store. They're buying the product. What is that all about? What that's all about, folks, is distribution in the marketplace. Distribution in the marketplace is when you're at highs, you have low volume, and they can price it up, but guess what? No one's in the store. And when no one's in the store, when the market falls out of bed, bottom line, and there's no bids inside the marketplace. We take a look at the Walmart. You know, in Walmart, one of the reasons we're going to continue to stay on Walmart is this. What you have with Walmart, folks, is this. Walmart was in a 12-year consolidation. It took that consolidation out over 2 years ago. What it's done now is that it's making its way back inside that consolidation. Right now, you're 4 points away from getting back inside the lower end of the consolidation. No, just inside the consolidation. If Walmart gets inside that consolidation, that is not only setting up that you're going to get to lower price, it's dramatically lower price. And what we also have happening, which is really unusual, is that Procter & Gamble is in the same type of situation. So you got to remember something. Procter & Gamble is one of the largest consumer companies in the world. Walmart is the largest retailer in the world. And it's like, okay, if these babies are coming back inside a consolidation, what is going on in that whole area? I suspect what all that actually is going on is you have distribution going on. The number in Walmart is 70.25. That's the number that you'd be looking at. We go take a look at the XAU, the HUI, which we had, if you're in the gold market, the silver market, both the XAU and the HUI, what they did out here today is this. They got into the gap, from the gap away on the way down. They did it with increased volume. That is saying that, number one, they couldn't hold price today. But because you got into that gap and you got into that gap with increased volume, what that is setting up is that it wants the XAU wants to get up and over the 71.11. Today we hit 70.66. If we take a look at, that's in the XAU. If we take a look at the Gold Bugs Index, the HUI hit 164, 166, 169 rather, sorry. 39, 34, that gap is 170.91. And the way it's going into those gaps is saying, guess what? We are going to get up and over those gaps. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow is up 67. Nasdaq's up 22. S&Ps are up 19. We're going to be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 49, Nasdaq's up 16, S&P's up 6.5. We get some selling coming into this close. And, folks, we also have a great guest coming into this close. We have Bennett McDowell. Bennett is the founder of TradersCoach.com. And if you go over to his website, TradersCoach.com, you can sign up for a great webinar that he's going to be doing. And that webinar is going to be on Wednesday. This Wednesday, he's doing the webinar with eSignal. Bennett, welcome to TFNN.
Tom, great to be here. Thank you for having me.
Absolutely, man. So first off, tell us exactly, what you're going to be doing with eSignal and how folks can sign up.
Yeah, sure. Be glad to. Well, the webinar we're going to do is basically we're going to be demonstrating our software tools, Tom, that we call the Applied Reality Trading, or ART tools for short.
Yes.
And they're software tools that are pre-built into eSignal. And we're going to be doing a demonstration on the 3rd of June at 4:30 p.m. Eastern Time. And the idea here is you sign up for the webinar. You go right to our website at TradersCoach.com. There's a button as soon as you get there. You can't miss it.
I can see it right in front of me.
Okay,
in fact,
good. You hit that,
we'll put
and
this
you're
right up. Okay.
And the idea is we want to show people how to use our software on different time frames and different markets. You know, a lot of times we'll give these presentations and folks will say, well, does it work on Forex? So we want to be able to show them that, and we want to be able to show them it works on the futures market as well as stocks and ETFs, of course.
And when we're talking, it's so cool when we're talking, software and the different markets. And the bottom line is that no matter, where folks are trading or what type of markets you're trading, my understanding is that, you can use this type of software because it's so robust on all different markets across the world, right?
Exactly. And, Tom, I know you're a big one on price patterns.
Yes.
And fibs. And what our software does is it actually focuses on price patterns that we've identified that are good for trend trading. We do have some tools for scalping the markets, but what we're primarily doing is focusing on trying to get trends on different time frames. So if you're a day trader and you're trading, for example, maybe the 2-minute time frame on the S&P E-mini, well, then our tools are going to be able to identify price patterns on that time frame that will show intraday trends. Now, intraday trends aren't going to last that long, maybe, 10, 20 minutes.
Sure.
But that's what the tools do. And then if you apply it on longer-term charts, like the daily charts, of course, a trend can last anywhere from, a few days to a week, and if you're in a good trend, hopefully a couple months. So the idea is it really does a good job of identifying those particular price patterns. But the other thing, too, that we focus on is risk control.
Yes.
Risk control is such a vital part of our trading program that we focus a lot on that as well.
Have you found a way, and you just brought up a great point, because I was doing a workshop like in, I think it was 96 with John Murphy, right?
Oh, you're going way back now.
Exactly. But, it's so cool, man, because, we were talking just about different risk control. Well, we were talking about different patents and all that, right?
Right.
And, John get up in the middle, and we were doing this in the World Trade Center in Boston. He get up and he says, listen, man, he says, if you have real money management, you can do a 50-day moving average. And, but the problem is, of course, no one will get out. So in your experience, right, are there any decent tricks that you can figure out to basically get people that type of money management, or is it just is what it is?
Well, that's what we do with our tools. What we'll do is the ART software does a great job of identifying key levels of resistance that we use for entry.
Yeah.
And then key levels of support that we actually use for our stop loss. And what it does is it looks for, Tom, patterns which are probably most called 1, 2, 3 patterns.
Yes.
In the market. Are you familiar with those?
Probably yes.
And those basically are saying, you'll have a thrust up on an uptrend, a pull back, and then another thrust up.
Right.
And when your final thrust exceeds the previous one, well, that's the definition of an uptrend.
Okay.
Higher highs and higher lows.
Sure.
So that's the classic 1, 2, 3 pattern. what our software does is, in addition to looking for patterns like that, it also has some calculations going on behind the scene where we're looking at the momentum that went into forming that 1, 2, 3 pattern. So there's a lot of 1, 2, 3 patterns that you can see in a trend, but not all of them are going to fit the requirements that our software looks for high probability entries and exits.
Yeah,
so it's going to give you an entry, and it's going to give you an exit that you can use for risk control as well.
Yeah, and then if that's like a hammer on top of the head, it's like, okay, hey, here it is. You should be getting right. I mean, that's
you're right.
I know, man. There's no doubt. But that's a good situation, because what does happen, you know, there it is. I mean, it's great when it's not subtle. You know what I mean? That it's like, okay, this is what it should be. This is what it is. You know, if it goes on the other side, just give it a few minutes and you know you're going to lose more money. That's the reality. So
that is it. I mean, when you got to get out, you got to get out. The other thing we've done was we've added a couple additional tools that we're going to demonstrate on Wednesday.
Okay.
That we call the enhancers. And the enhancers are a set of 3 indicators that are at the bottom of the chart that we use in conjunction with the ART software that's looking at price patterns.
Okay.
And they're looking at momentum. And, you know, I'm not a big one for indicators overall, but they do a great job of providing filters or confirmations of markets when they're trending. For example, some of our filters at the bottom, they'll be bullish, and those are the actual entries you want to take, is when the enhancers are bullish, as well as the price patterns. We call the indicator that goes on the price pattern a pyramid trading point.
Okay.
And, Tom, it looks like a triangle. I don't know if you can see it on any of our charts on our home page. You're still on the website.
Yeah, we are.
See those,
we are.
And you'll kind of get an idea when I'm talking.
I see them right here. Okay, cool, man. Right. And where are you located, Bennett?
Well, we're in sunny San Diego.
That's a beautiful thing, man.
Yeah, well, it's sunny this week. Last week we had a lot of cloudy weather, so it's nice to have the sun back.
Okay. So listen, folks, you go to traderscoach.com, and as soon as you get there, what you're going to see is right in the very front. It says Applied Reality Trading. You're going to see eSignal. You can hit register now, right here. The webinar is going to be 4:30 Eastern Standard Time, Wednesday. And look at that good-looking guy there. Hey, baby.
Oh, you're too kind, Tom.
I like it. Well, listen, man, we appreciate you coming on. I look forward to having you again. And it's traderscoach.com, folks. Hit that button, and you're going to have a great webinar come this Wednesday.
Thank you, Tom, so much. And we look forward to seeing everybody there.
Absolutely, Bennett. Okay, you have a great one. Have a safe one, man.
All right, thank you. You too now.
You're welcome.
Bye-bye.
Our phone number is 877-927-6648. Let's go to Ken in Las Vegas. Hey, Ken, what's going on?
Hey, Tom. Thank you. Thank you for taking my call. I appreciate that.
Absolutely. Thanks for calling. Thanks for holding, man.
Yeah, Tom, I had a couple of questions for you. I have read your white paper regarding ETFs. I wanted to see, what do you think about GLD and SLV as a representation of gold and silver? Would they be good ETFs to buy, or do you think they are?
No, they would. They're not leveraged ETFs. So the white paper that is up there on the ETF structure has to do with leveraged products. Okay. What ends up happening with the GLD or the SLV? The GLD, folks, is 10% of the gold contract. The SLV is 10% of the silver contract. Those will go, point for point of what the actual physical metal does do, okay? So they act correctly. What happens with the leverage product is that the leverage product resets itself each and every day, so it's a new product, and they compound on the way up, and they get defensive on the way down. So if you had a choppy market, you get killed. The leverage product, folks, whether you're a bull or a bear, if the market goes sideways, you're going to lose in both of them. If it trends, you'll make good money. But, yeah, to answer your question, Ken, either one of those or both of those they're not leveraged, number one. So that, yes, as a proxy for the actual physical metal, they work. And, what happens to the GLD right now, I like how the GLD pushed into the swing point today, had an expansion of volume. That's saying that it's going to make another run for it. The SLV is actually even stronger. That also did the exact same thing. That pushed into the swing point. We take a look at this. The SLV today had, let's see, 8.7 million in volume, and we came down with 6.7. The SLV is really strong, man. If you're going to do one of them, I'd do the SLV right now.
Okay. And Tom, since you are the expert on the metals, if you had to buy the stocks for gold or or silver, like what would you recommend if you had to buy like 3 or 4 gold
This is what to do. Listen, go get the gold report. You can get the gold report for a month for free. It comes out tomorrow morning. Get it right now, and you get it tomorrow morning for free for a month. If you like it after a month, you're going to get charged. But if you don't like it, even if you like it, you can still cancel it and you have the stocks, man.
All right.
Cooking, brother.
Appreciate that, Tom.
Have a great one, man. Have a safe one. Don't forget, folks, if you want to go to that workshop with Bennett McDowell, go to traderscoach.com. You're going to see it right in the front page. Dow right now is up 30. Nasdaq's up 15. S&Ps are up 4.5. Market's giving it up, folks. Going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is up 37. You get the Nasdaq up 13. S&Ps are up 5. And this market, folks, having a hard time holding it coming into the close. I expect you're going to see some more selling because see what it just did. We were talking about the halfway move in the DAX. What you had, I'll bring this up for you for a second so you can see how this is shaking out, though. If we go over to, let me go over to the E-minis for a second, and you can see how this thing is shaking out. The sell down, and this is where the aspect that when you get these large operators that are selling inside the marketplace, which we had this morning, that same operator more than likely is right into this market right now because the sell down. So picture on a 10-minute basis, you were doing let's see, we were doing 11,000 contracts at the highs, right? When they slammed this thing down the last 20 minutes, they did 27,000 contracts, and then they did 32,000 contracts. So the way that is set up is that they're not going to basically give this up coming into the close. What you are into is that you're into that high volume bar. That's where I was, at the beginning of the program. That's where I was into. Now that we're into the high volume bar, which was the 2112. So that sets up that you get 2106. That's how that thing sets up. And you get we get 9 minutes left into the close. That's enough time to basically jam that thing right into the bottom. So what would be happening there is that you'd be jamming it into the bottom of how you went up this morning. And I suspect that's what you're going to have. Now, if in fact that's what actually happens, that would be a major failure. Because what you have is this. We knew that you didn't have the volume at the characteristic up there. But if you couldn't hold the price, when in fact, you did hold the price, all afternoon long, that's a big number, folks. That's what it comes down to. What we will have is that you're going to have the aspect that you actually try to push into the high, and we're going to have light volume. We came down on Friday with 1.1 billion shares in the NYSE. In the NASDAQ, it was a monster. In the NASDAQ, we came down with 2 billion shares. Bottom line is that now you try to push back higher, couldn't handle higher price. What does that set up? That sets up you're going south, and you're going south in a tremendous way. So bottom line, thank you. There we go. I like it. And folks, if you haven't traded the NDX product yet, I mean the Nadex product yet, get over there and do it. Okay, this is the ultimate of volatility and defined risk. So defined risk specifically goes like this. Defined risk has to do with how much you're putting up versus what you can make. And, these contracts, okay, if you're familiar with the art of time in the trade, the bottom line is that your probability can go up dramatically versus the aspect of how much you're putting up. You can come over to our website at TFNN and check out the banner. The banner's on the top, on the side, and as you do that, bottom line, they'll put $25,000 of paper money into your account. I'm doing a program now. John Logan starts us off at 8 in the morning. We got Larry Pesavento at 9. I'm at 10, but at least for this week, because Mr. Steve Rhodes is on vacation. You get Basil at 11. Bottom line, a lot of trades out here on a continual basis. We come back on at 3 in the afternoon, same type of deal. Tell your friends about it. Just come on over here, folks. Bottom line is that we'll walk through some trades each and every day. We got, let's see, so this whole thing's going to get 5 minutes left. It's going to basically give it up, period. Let's go over to the S&Ps, just look at the S&Ps for a second. So your cash, your futures, right now we're trading out at 21.09. That's also going to give it up. You're going to have a flat market coming into this close. And all that is set up a small ABC structure on the way down. Inside the Dow Industrials, it's a major failure, because inside the Dow, the correlation there is, you got into a price point today of 18,105. You're at 037. The Dow had to close back over 103. And you got over there, got to 105. This is what's amazing. So the Dow got to the 105 area, 18,105, couldn't hold it. And so you couldn't hold it. What does that set up? That sets up the Dow Industrials wants to run down to 17,579. And keep in mind that we are we are in window dressing. Window dressing specifically goes like this. What window dressing is all about is that window dressing is saying that last 2 days of the month, you're going to be in there buying stocks, holding up the market. First 2 days of the month were even more dramatic, because what the first 2 days of the month are is this. The first 2 days of the month have to do with the aspect that you get 401k money coming into the market, 401k money being put to work. Even with that aspect, what's happening? Well, with that aspect, folks, the market can't hold price. And when the market can't hold price and you are pushing lower and you have juice behind the move, that is a big number. That is no doubt a big number, folks. Dow right now up 25. You get the Nasdaq up 9. S&Ps are up 3.5. The bond market. I suspect what we have here is this. I didn't talk a lot about the dollar. Bonds, folks, are going to go down in price, up in interest rate structure. Whether the Fed goes or not, the bond market is going. I think the King dollar is the biggest one to keep your eye on right now. The reason being is with King dollar is that King dollar itself had made an exact 0.618 retracement, which is just totally bizarre. It's not bizarre, but bottom line is that when that happens, folks, it's a big heads up. What you also have is this, is that it tried to test it today, and it couldn't handle it. Now, I suspect, we'll probably get another test. We'll see whether it can handle it when it tries to get into this 97.80 once again. You're at 97.52. But the way that this is trading, it looks to me that what you're going to have is that you're going to have lower price in the dollar. In fact, it may be an ABC structure on the way down. And the number we're dealing with, the last low out here was 93.28. So I suspect it's going to go after the 93.28. If you hit that area, and we hit that area with juice, meaning that as you get into that area, that we break it with volume, what that sets up is it sets up an 88 US dollar. That's how that thing is shaken out. What's still on the agenda out here, I suspect this summer, which is going to basically put some monster pressure on the market, is Greece. Okay, all the players are going to be meeting tonight, and the bottom line is that Greece is going to default, folks. That's the bottom line. They can slice and dice this any way they want. What you can see, which is pretty cool, is the aspect of how large institutions think that they can put pressure, and they can, on other institutions, and it's the large sharks in the water and who's going to be alive at the end of the day. Well, guess what? Greece is going to be alive at the end of the day. European Union will be alive, but the European Union is going to be the one that's wounded. Why? Because they lent all the money to Greece. Greece is saying, see you later. I'm going to sit down, drink my ouzo, have some fun, and I'm not going to pay you back. And Germany is stuck holding the bag. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 22, was up 100, Nasdaq's up 10, S&Ps are up 2.5. We're going to be right back.
Is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Beatrice Porter. Believe there is a great power silently working all things for good. Behave yourself and never mind the rest. Market-wise, let's take a look at it out here. We had the Dow Industrials up 29, NASDAQ up 27, S&P's up 4.5. Gold contract flat at $1,189 an ounce. Silver up 2 cents at $16.73 an ounce. Platinum down $8.50 at $1,104 an ounce. Light sweet crude flat at $60.31 a barrel. Bonds. The bonds got toasted and roasted, folks. You had the 10-year down 22 ticks, 126.31. 30-year off full 2 points at 153.22. King dollar up 514 ticks at 97.50. The euro down 57 at 109, and the yen up 67 at 124.82. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We get volatility in spades, baby. It's a trader's paradise out here. So let's go take a look at the SPY first. What do we have with the SPY? SPY finishes the market out here at 211.57. You end up with the doji. The thing that's amazing, folks, is this market out here had volatility in it today. And what it also did is it traded just like the DAX. It was pretty wild watching this thing shake out. Specifically, what I mean is this. What the DAX has done quite a bit is that the DAX has got loaded on the way down, made its way back up, finished halfway. That's what our markets did out here today. If we take a look at the SPY, what you had is this, is that we had opened up here today at 211.94. Then the couple operators, maybe one operator, slammed the thing down pretty hard. It got it right down to 210.62 in a heartbeat, literally in 20 minutes. Then you crawled all the way back up. But, you know, we were at our lows this morning at 10.10. Market crawled all the way back up and got into its highs at a price point of 14.30, 2.30. At that particular point, guess what? It starts selling off slightly. Volume expanded. Bottom line, that same operator came right back in. And the last bar in this is set up that we're going to have lower prices out here tomorrow, too, because the last bar, they just threw it all up. They did 10% of the volume in the last bar. 9 million shares were basically dumped. That 9 million shares was going into the bar as we had gone topside this morning at the 12:20 place. So you got basically a halfway move today. You got a failure on price. You got a failure on volume. On Friday, folks, we had 1.1 billion on the NYSE. We had done 2 billion on the NASDAQ. Bottom line is that if we take a look at the 3 Qs, what we have with the 3 Qs right now is that you're hanging at the highs, and they're still the strongest indice up there, but you're hanging at the highs with a nice little doji up there. So we hit a low today of 109.52. You closed at 110.42. Bottom line is that, you know, I suspect this is until it gets inside. Number one, it has to get inside the 109.42. Right now we're at 110.42. The IWM, we take a look at the small caps. What do we have with the small caps? Small caps closed out here at a price point of 124.28. And the small caps, what the small caps haven't been able to do is that they haven't been able to test their high. It doesn't look to me like they're actually going to test their high. The small caps, we did 35 million shares today. Now, that's a good number, by the way, the 35 million. We had gone down on about 33 million. But what we're doing is that we're going into the downdraft that had been created out there from the 25th, which is 43 million. So at 43 million, bottom line, it's going to need a lot more volume to get up and over that level, and the market just doesn't have the buyers to basically do that. Gold contract. What do we have with gold? This gold's going to be wild watching this whole thing shake out, folks. The reason being is that what gold has done is this. Gold all last week rejected lower price. That is with the dollar doing a nice counter-trend bounce topside. And we know commodities are dictated by the dollar, period. So what do we have out here today? We did monster volume. We did 161,000 contracts just in the contract with trading. You got to a price point of 1204. Now, you didn't hold price, but you had volume. When you don't hold price and you have volume, folks, you go right back topside. So I expect tomorrow, latest the next day, you're going to be right back topside. That thing's going to run up to this 12, no, it'll be 1232. Last 1232, yeah, 1232 is the last high up there. That's where I suspect you're going to run to. Now, let's go over to the silver contract. Silver is actually giving us a better indication as to where this market wants to go. If we take a look at silver, watch what this is really cool because the SLV is set up like this too. What silver did today is this. Silver gets to a price point of $17.10. We do 54,000 contracts. That level took out how we came down, number one, on 526. It's much closer to the swing point of 1775. Now watch if we look at the SLV. So the correlation goes, the SLV is 10% of the price of silver. The SLV, you talk about SLV, doing some juice. The SLV out here today did 9.3 million. Got into the downdraft that only had 6.7. So the SLV is trading at $16. That baby wants to get up to $16.96. It looks to me like we want to go to $17.69. That $17.69 is the highs of January of this year. Nice setup, big time. We go take a look at the King Dollar because everything is dictated by King Dollar, meaning in the commodity market. Well, actually, what's going on is that King Dollar is also dictating the S&P, folks. So we take a look at King Dollar. This is where we have a King Dollar. King Dollar is trading out at a price point of 97.49. Now, King Dollar had volume this morning, and it gave it up. You know, we had already done like 37,000 contracts at 10:15 this morning. It only ended up doing 50,000 contracts. Bottom line, the high that we're generating up there did 64,000 contracts. It didn't make the high, number one. I'm not talking about the high of the dollar. I'm talking about the high that was established on the 27th of May last week. That's at the 0.618. Couldn't handle it. Backed off it. I expect what you're going to see out here tomorrow is that first off, the dollar is going to back down. As we back down, we'll see how the metals market reacts on that back down. The bond market is getting toasted and roasted. The bond market itself is looking that the actual market will get the interest rates going higher. If we take a look at the TLT did 12 million shares today. On the counter trend bounce, it did 7.9. So Friday, when we went topside, 7.9. You did 12 million. Your swing point down the bottom, where I expect it's going to go after, is 118.13. And 118.13, folks, only has 8.4 million. So this very well could be a very large ABC structure on the way down. Your A point on this would be 131. Your B point is 118. What that, 828, that's $13. Your C point is 123, gets you $1.10. $1.10, folks, is saying that these rates are going higher. You need a mortgage out there, go get it, okay? I don't expect rates to go dramatically higher, but guess what? Half a point, yeah, they can go up a half a point. Right now, you're still going to be able to get a 30-year, very inexpensive. The 10-year, which is that's with the 30 year is going to be priced off, is only still at 2.18. That'll get you about a 30-year at about a 3.8 to a 3.85. And folks, get money as long as you can get it out there. That's the bottom line. Don't go. I can understand sometimes when you want to go for a 15-year and get rid of it, but guess what? I suspect when these rates turn, they're going to turn for a long period of time. This is very unusual. Just as 14% rates, folks, were unusual in 1980, 1981, a 3%, 3.5%, 30-year rate is very unusual now, okay? Somewhere in the middle of the next 5 or 10 years, we're going to be out there probably 5.5% or something like that. That couple percent is going to save you a huge amount of money over the course of time. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 29. NASDAQ up 10. S&P's up 3.5. Gold is trading at 11.89. You get silver at 16.74. Light sweet crude, 60.34. We're going to be right back. If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And I always talk about yesterday's gone, tomorrow's not here. What are you going to do right now? And time, folks, is just wild. It just never stops. And you know what's amazing, folks? Our man, Mr. Andy Hecht. This is just absolutely so cool. He is celebrating his 100th issue today, okay? It's pretty amazing, actually. It blows my mind. And we're going to do a celebration on it. You come over to our website at TFNN. You can get the Technomental Commodity Report right here, right now. And you can get this report, folks, in honor of that 100th anniversary. We're bringing back, this on a temporary basis, I believe it's only this week, we're bringing back the introductory pricing. And that pricing is only $59 a month as long as you keep the letter. So that's a savings of $20 a month. You know our man, Mr. Andy Hecht, he's on every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Great program, great newsletter. Andy Hecht, congratulations.
Thank you. How are you? Time goes fast, huh?
It blows my mind, man. Tommy came in and says the 100th anniversary. I said, you're going to be kidding me, man. That's crazy.
It's crazy. Especially it's the 100th anniversary of the newsletter, and it's only a weekly newsletter.
I know. That's my point. Exactly.
2 years goes fast, but I tell you, I have a great time here at TFNN, and I love doing it.
It's been a good 2 years, too. Totally, man.
Yeah, totally. It's been good. It's been good. And look, I know you mentioned the economics that we're keeping this open till Thursday, and Thursday I'll have some for anyone who subscribes. I'll have some new trade recommendations.
Okay.
There's a lot of things I'm looking at out there, particularly in the grains, which are very depressed.
Yep.
And the dollar is telling us all kinds of things here, and very, very interesting markets.
Listen, man, there's no doubt the volatility is out here in spades. I mean, I don't know if you see that S&P today up, down, and all around, and it's
up,
like
down, and sideways, baby.
Big time.
It is.
No doubt.
Hey, I have to tell you, I have to thank you. You inspired me.
Yeah.
Last week when I was listening to you, you had a little bit of an editorial in your show. And tomorrow I have a Seeking Alpha coming out. It's not out yet, but it's coming out tomorrow.
Okay.
And it was inspired by you, and the name of the article is Diamond in the Rough.
Okay.
And it's about Jamie Dimon and J.P. Morgan.
Oh, cool. Okay.
So I will send it to you in the morning, and I hope I'll post it in the den.
Oh, good.
I basically totally agreed with your little editorial, and I kind of took it to the next level.
Good for you, man. Well, listen, I can't wait to read it. I think it's that's good. That's good stuff, man. People have to get.
I think someone has to. My one comment about what he did and what he said last week is. You can't, he's basically taken on his bosses. It's one thing if you're going to take on the regulators and politicians, that's all fair game. But when you're the CEO of a corporation, you report to your shareholders. Right. And it was, it was a very interesting comment he had. I would think that based on his that his days could be numbered at J.P. Morgan, but we shall see.
What happened, folks, is that he was taking on those big voting blocks, meaning the two companies that go in for shareholders, and he was saying that basically the shareholders were stupid. That's what he said, I believe, flat out.
Yes. I actually, in my article, one of the subtitles is "Amy morons."
Yeah, I mean that's pretty intense. That word is terrible anyway. Okay.
Oh, horrible.
But what I got out of it more than anything is this, and I remember the first time that I ever sat down with a lobbyist, and this is when I was 30 years old, and this guy was going against me, by the way. Okay, he was the largest tobacco lobbyist in the country, but he was going against me on another issue, and when he explained to me how they were going to do it, it just absolutely blew my mind because it was actually future talk, the same type of deal. Do you know what I mean? that no, they're going to reverse everything. He sat me down right to my face, told me what they're going to do. They pulled it off, number one. And what they do, folks, is that they just don't care. They just lie. They'll do anything and everything. That's it. These are all high-end lawyers, too, by the way, okay? They make sure that, yeah, it's all legal, whatever they do, but they lie beyond belief. They just send it out there. And they'll set up a different company and all that. Bottom line is that the amount of money that these banks have got fined, I mean, they just pled guilty to a felony. I mean, of fixing rates, okay? So when they fix the rates, folks, okay, each and everyone has already got hit on our mortgages, okay? I mean, that's kind of swept under the rug. But the bottom line is that there's plenty of people that I didn't have a LIBOR rate, but if you had a LIBOR rate, a fixed plus a LIBOR rate, folks, a variable plus a LIBOR rate, you got screwed. That's the bottom line. You know?
Right. And by the way, when an organization pleads guilty to a felony, Harry Truman once said the buck stops here.
Yeah.
You know what I mean? It stops with the top guy.
But the SEC let him off. You know, they gave him a waiver. I know.
Anyway, commodities are going to be volatile. Sign up for this newsletter because there's going to be a lot of opportunities ahead. And you know what? You know, the action in markets. You said it before the break. Volatility is a trader's paradise.
Yeah.
And there are going to be opportunities galore.
And what's cool, folks, is that when you have true volatility, what does happen is that as long as you're not greedy, a bull and a bear can actually make money. That's what's pretty cool about it, okay? Because the spreads, you know, get pretty wide. The real key is that, you know, you can't stay too long. You can't stay to the party. I don't care whether you're a bull or a bear.
That's right. You can't close the bar down. That's for sure.
There's no doubt. There's no doubt.
There's never an upside. I always told my sons, nothing good ever happens after 1 a.m.
That's a fact, too. There's no doubt about that. The only thing, yeah, there's no doubt about that. I know.
No, not when you're out and about. Nothing good ever.
No doubt. Okay, so your 100th anniversary, that is just crazy, man.
It's wild. It's definitely wild. And I'm coming up on my 200th show. I think this week is like number 193 or something. It's just unbelievable how time goes. I couldn't even calculate how many times you've been on. You're in the thousands, Tom.
Oh, yeah. No, there's no doubt. Yeah.
Must be coming up close to 10,000.
It's probably more than that. Yeah, three.
Isn't it amazing?
Yeah. Yeah, I know, it's crazy. And believe me, it's and you know I'm doing the 10 o'clock in the morning show right now, and I love it. The morning shows, man, when the market's open, folks, that's right up my alley. The same with the 3 o'clock. But
you know, my biggest fear when you first asked me to do this show was would I be able to fill up an hour?
Yeah.
And I was really concerned about that. And it's so funny. Every show I do now, it's like, oh, I left that out. Oh, it's just amazing how it's like anything. Practice makes you better.
Well, and we're lucky because what does happen, folks, is that because the markets move, and we look at a lot of different markets, it is a lot easier many times as long as the markets are moving. If the markets are flat, that stinks, folks. That's the bottom line.
Of course, but the markets give us that. Listen, that's the reason I wind up writing 6 or 8 articles a week on the weekends because, and my list is 12 or 14. I have to cull the herd. There's just so much to talk about, so much to write about, so much to think about, and that's a good thing. That keeps us busy and it keeps us young.
No, there's no doubt about it, man. So, folks, come over to our website at TFNN, and what you're going to see right on the front page, you're going to see our man, Mr. Andy Hecht. You're going to see that it says celebrate this 100th edition of the Technometric Commodity Report. Normally, that report is $79 a month. Bottom line, you get a $59 a month, and you're in. And because what this is the introductory rate. This won't go up, folks. The bottom line, if you get that rate, you're in. That's what it comes down to. It's a great report. Comes out once a week. And just so you understand something, you don't have to be trading commodities, okay? He has ETF structures in there that basically do the same thing as an actual commodity does.
Exactly.
Hey, man, you have a great one, safe one. Of course, we look forward to the show tomorrow.
I'll talk to you tomorrow, Tom.
Absolutely. Stay right there, folks. We'll be coming right back. Dow Industrials finished up 29, NASDAQ up 12, S&P's up 3.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 29, Nasdaq up 12, S&P's up 5. Market gave it up coming into the close. And as we do each and every Monday, folks, at 20 past the second hour, we get our man from TD Ameritrade Thinkorswim, Sean Cruz. Don't forget, folks, TD Ameritrade Thinkorswim has an outstanding program, option program, every Tuesday, right here at TFNN. 12 to 1 Eastern Standard Time. Of course, you can get all the programming at TFNN right on your cell phone. We start live programming 10 hours a day, 8 o'clock in the morning to 6 o'clock in the evening. It's TFNN.mobi. Now, if you haven't test drove the Thinkorswim platform, get over to our website at TFNN. You're going to see the banner on the top and on the side. You can hit the banner. You can bring it up. It's an outstanding platform. I've used it for almost probably 12 years now. Bottom line is, it doesn't matter whether you're trading equities, futures, currencies, or commodities. It's on one platform, outstanding platform, fast, reliable, all of the above. Check it out right on the front page of TFNN. Sean Cruz, what's happening?
Hey, my man. How are you today?
Doing great, man. You having a good day out there?
Yeah, we are.
Hey, well, listen, congratulations, too. Chicago Blackhawks, man.
I know.
And listen, you know, I'm from Boston, but guess what? I'm in Tampa. So it's you guys and us, and it's going to be great, man. It's going to be a great series, man.
Yeah, I mean, it's one of those things. It always makes Monday easier when you start off knowing you're going to be watching the Hawks in the Stanley Cup by the end of the week.
Seriously, man. Hey, so listen to this. This is wicked. We'll get to the options in a second, but this is wicked. So I'm not kidding. So you got to picture this, folks. I'm from Boston, of course, but I've been down here, Sean, now 14 years. Okay, so I love the Lightning. They're great. Okay. So really, like this year, you know, I really turned into a real Lightning fan, even when the Bruins come into town. Okay. So you get a picture of that. But this would end up happening. Is that I'm up in Chicago doing some business with you guys just a couple weeks ago, right? Mm-hmm. And I'm in the bar, and man, I'm seeing the Blackhawks jacket, right? And I'm saying, oh man, I love those colors, right?
Yeah.
And then last night, folks, if you saw, Saturday night, if you saw the hats, those hats are dynamite, man. We need some those hats for the winning the championship. It's so cool, man. Anyway,
I know. Hey,
so I'm trying to figure out.
Anytime I can scoop up more Blackhawk stuff, I'm okay with it.
Yeah, no doubt, man. I'm trying to figure out how I can get away with wearing one of those down in Tampa when I go for the Lightning, but I like the Blackhawks hat. I'm in trouble, man.
I get back up here for one of the games, then. How about that?
No doubt, no doubt. So here, let's talk. You know, we get the option show tomorrow, 12 to 1. Let's talk options. You know what's intriguing here? I mean, you know, we had volatility at the beginning of the day, flat all day, and we had some nice volatility at the end of the day.
You know what we did? It's one of those days. There was a pretty good, you know, just choppiness to the market today, both in, you know, the S&P 500 futures. We saw that a little bit. The VIX futures of interest, they're pretty much down, you know, a little flat, but we did finish a lot higher. The big thing I noticed was some of the moves in the bonds and in the dollar. If you take a look at, I like to look at TNX for the 10-year yield. I mean, we were talking how it looked like that, you know, 2.1% level was a pretty good support. And we were watching that last week to see if that would hold and we'd bounce higher. And it looks like we got our answer today because we definitely bounced right off of that. But we're watching. I'm thinking there might be a lot of volatility. There's going to be more days like today this week. So we got a lot of economic data out today. We got to look at personal income and outlays, ISM manufacturing index, which was a big mover for the markets. We got another look at construction spending. You know, tomorrow we're going to get motor vehicle sales, factory orders. Wednesday, we get another look at international trade, which I think normally people wouldn't lock in on too much. But international trade was a big reason why our GDP got revised into negative territory for the first quarter. So I think people, you know, are now saying, okay, first quarter is, we realize it's behind us. It was not a good quarter. Now they're kind of looking to see, you know, what are we getting now that's kind of giving us a little bit more of a forward look into what we can expect for GDP in the second quarter. And, you know, that all builds up into obviously the employment situation on Friday. So
yeah, there's a lot happening, man. Talk to me about the dollar, because it is intriguing. You know, we were on that streak. You know, the streak in the dollar, folks, started last July. Okay, it was a one-way streak inside the dollar. You know, and of course, you know, the dollar, you know, went from basically, well, the index itself went from like 80 up to 100. And right when the whole world thought it was going to go to 200, I'm exaggerating, of course, but bottom line, you know, it pulls back And we'll see where this baby goes. But the dollar definitely, the market. It looks to me like the market likes a strong dollar and doesn't like a weak dollar now, which is really bizarre.
Yeah, and you know what's interesting too is the move, the march higher, going into, I would say, all the way there into February, maybe late February.
Yes.
It was a pretty gradual move. But then once we got in here into, we started getting up there, we bounced to 100. We were down around 94, and we made our way to 100 very quickly. And then those moves got really, really pronounced. So it started making its move. It wasn't gradual. They were big bounces back and forth. And it was moving in the direction it was going to go very fast. So if you were someone who was chasing the dollar, trying to find ways to get in and out, you either had a very, very good time trading that, or you got run over repeatedly over and over again on both sides of that move. But I mean, the dollar, it is interesting that we're going to see how that plays out. Is the strength of the dollar, companies going to be able to adjust to that? Because a lot of the numbers we've been getting coming out in terms of durable goods, the manufacturing numbers we got out today,
sure,
they all talk about the strength of the dollar as something that's actually really hitting their demand overseas, and that's not very good for us here, we're finding out. So,
and it's intriguing. What Sean just brought up, folks, is really cool, because this is what ends up happening. No matter how long you're in the marketplace, right? When you see moves like this, and then they go up, and then they really go up, it's like, oh no, it's the runaway train's gone. And as he just said, people will jump in, and then it flips back, then they jump out. And folks, do yourself a favor, wait and have patience, and I can understand that, right? We just said, Sean, on the dollar, because it was so dramatic, and like everything was coming out. Oh, the dollar's going to the moon, the moon, the moon. But
yeah,
isn't it crazy how it works, man?
And even going into the end of April, beginning of May, if you look at the dollar, it actually looked like it was settling down. It was going to start making sort of a little bit more of a gradual trend lower.
Yes.
And then all of a sudden it turned back around and just ripped higher. I mean, we went from 93 up to pretty much 96 in, 4 candles? 4
in a
days?
Heartbeat. Yeah, no doubt. No doubt.
So this thing will turn around, and if you aren't careful, you can definitely get run over. But that's something we talk about here with our clients a lot is, one, if you want to do it, you don't have to just go out there and trade the futures. There's ETFs you can use. You maybe use options to get a little bit more efficient use of your capital. And then you also want to stay risk defined. So if you do get run over on the wrong side, at least know what your risk is. Manage your risk from entry, so you're not just sitting there short, dollar futures or long dollar futures. When that move kind of turns around, you get that reversal, and you can find yourself getting run over very, very quickly.
Absolutely, folks. And when we talk defined risk, and this is what's so cool about options, and you really want to wrap your head around this if you haven't been in the option market or trade the option market. Defined risk means that if you're putting up $100, $200, that's all you can lose. And the market can fluctuate around that and go up, down, and all around. That's the first part. When you hear penny-wide spreads, 2 penny-wide spreads, that's exactly what that would mean, folks. So if I give you an idea, let's say right now the 3 Qs are trading 110.39 to 110.40, 42. During the day, okay, which would blow your mind, okay, is that intraday, okay, whether you're going in for a 110 put or a 110 call. So you have a 110 putter would be like 150 to 152 or 3. A call would be 128 to 130, right there. It's important. I mean, just the opposite, rather. Sorry about that, okay? That was just the opposite, the calls and puts. The point is that instead of putting up huge amounts of money and you have more money at risk, instead of putting up 110 grand, guess what? You have basically you can put up 1,000, or you can say instead of 10 or 11 grand, you're putting up 110, okay? And that's where it's at, folks, okay? It's amazing, Sean, is that over the course of, we've been penny wide for quite a while, but it's much, well, the Qs, SPYs, and all that, but you can go into these Dow stocks. I love some of these Dow stocks trading options because the volatility dies on them, and when they move, and the Dow stocks have been moving, man, they move big, man. Do you know what I mean? Yeah. Walmart, Procter & Gamble. I mean, I just had them, and it was like, you got to be kidding me. Procter & Gamble, turned around and, went from 81.13 down to 78. It's like, man, you got to be kidding me, man. I mean, yeah.
It's especially for people like you say anything speculative. It's somebody was asking me about eBay.
Yes.
eBay's had 3 really big days in a row. There's been some unusual options activity in there.
Yes.
But you see people that either want to fade it, they want to short into that, or they want to try and hop on and go long.
Right.
And it's like, instead of shorting 100 shares or 500 shares, whatever it is, the capital you need to do that,
Sure.
or even going long 500 shares, you might want to use options, de-risk, define, and control your risk, just in case you're wrong. If you're trying to maybe say, I think this, I'm going to fade this, maybe you look at selling a call spread where, hey, if you're right, you make some money. If you're wrong, you live to trade another day. You don't see $3,000 get wiped out of your account. In one of these candles, it could easily do that. So,
and what Sean just said about the spreads, folks, get your head around the spreads. The spreads are just like hitting singles and doubles, and it's an amazing, great way to really get to understand the option market. It's tomorrow noon to 1. TD Ameritrade Thinkorswim. They do great strategy sessions every single day in the swim lessons, folks. Sean, you have a great night, safe night. Congratulations again on the Blackhawks. Look forward to show tomorrow.
Platinum,
all right, take care. Have a good one.
crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN, 8 o'clock in the morning. Get our man, Mr. John Logan, kicking us off 8 to 9. You get Larry Pezzavento 9 to 10. I'm 10 to 11. Basil Chapman is 11 to 12. We get our man, Mr. Dave White. And, of course, we came right back here in the afternoon with Darryl Martin, Andy Hecht. I came back here from 3 to 5 each and every trading day. You can get all that programming right on your cell phone, folks, TFNN.mobi. Now, let's get overseas and take a look at the DAX, because what we have out here is this. If we take a look at the DAX, the advantage of wrapping your head around Europe, folks, has to do with Europe closes at 11:30, has to do with how is the DAX in those indices trading compared to where we are. And what you're going to see on the DAX is this. The DAX hit a high in April. That high was 12,388. Now, we're $900 off the high. The high that was hit, extremely light volume. You came off that high with volume. You know, now we're right back where we were in February of 2014. That's the first part. Second part, and this is where it's going to get really wild, and this is what it is. When we took off topside in the DAX, and the DAX certainly took off topside, okay, in a big way, too, not in a small way. It had taken out the 2007 highs. It took those highs out in 2013, October of 2013. Makes the next leg, and the next leg that it made up was a dramatic leg. That was January of this year. January of this year, we went from the 9,300 mark up to 12,300. Now, the way it's setting up right now is that it wants to come back to where it started from, which is 10,050. How we come back to that level is going to dictate, I suspect, how our own markets are going to trade. It was very subtle. But last month, what you did do is that you had an expansion of volume on the way back. We had made highs of 1.8. You come back at 1.779. Bottom line, you know, we'll see where this shakes out this month. But I suspect, number one, you're going to go after the 11,167. You know, we'll see where it goes from there. If we take a look at the FTSE and the UK, what you have with the FTSE is that the FTSE hasn't got over and stayed over its highs. The FTSE basically is trading like our Dow. Right now we're well, actually, the FTSE is still over the consolidation. The FTSE is real close to basically breaking. No, it did it last night. So the FTSE is in the lower consolidation. So the FTSE is trading at 69.53. No, I'm sorry, folks. Yeah, it is still above it. It's above it by 60 points. The number to watch in the FTSE is 68.94. Now, when I throw out these numbers, the reason that the numbers are important is this. When you are in consolidations, and that consolidation has gone on for a long time, and you break out of the consolidation, a true breakout, number one, you want to stay out of the consolidation, and you don't even want to think about getting back inside it. Because if you get back inside the consolidation, it's a failure. Doesn't mean you can't go back topside again, but what it normally does is it goes to the bottom of the consolidation. Now, the bottom of the consolidation in the FTSE is a long way down. We're talking about 6,000, 6,072 to be exact. So you're dealing with basically another 50 points coming back inside it. 60, yeah, dealing with 60 points. I suspect more than likely what you're going to see out here is we're probably going to see it tomorrow. Now, what was unusual, and this is what's unusual, is Asia last night, the Shanghai is wild, folks. So what happened with the Shanghai last night is that the Shanghai went up 4.7%. The Shanghai, you know, is so volatile, it's unbelievable. I mean, it really took in some big juice. The Shanghai had gone down 6% in 2 days. It just went back 4%. Now, what was unusual about it? What was unusual is that you didn't have follow-through in Europe. I suspect what you have is this. So when we came off the high in the Shanghai, did it with 78 billion with the B. We just went up last night with 59. So that's telling me two different things. It's telling me, number one, the high is going to get tested. That's 49.86. That's not far from where we are because it went up 216 last night. How that test is going to be a big heads up all over the place. The reason being is that if you've ever watched the Shanghai itself, okay, loves to get to much higher prices. Then when that trend ends in the Shanghai, oh man, it ends with a vengeance, folks. Nothing simple about it. You know, it's not something you want to be trading, I can tell you that. But it is something that you can trade other indices off of. The reason being is that what you do have is that you have a situation that the market has already been closed. If you happen to, you know, watch markets at night, you know, it's bottom line, you can get a real indication of where Europe may go. But when we had divergence like we had this morning, that was a big heads up in our own markets that our market's going to have a hard time holding price. Because you had the DAX, the FTSE were flat. Our markets were up $7 this morning. It crawled all the way up. They hit them fast. They crawled all the way back up again. They hit them again at the close. You know, so what that sets up, I suspect, is that you're going to get follow through to the downside tomorrow. What you do have is that we're in window dressing, and it's really unusual that the market can't hold higher price, at least for the first couple days of the month. Because what you do have the first couple days of the month, the window dressing that we're talking about the beginning of the month, is that you're talking about all the pension money that just comes out of checks on a continual basis. Well, that money, folks, gets put to work. So when that money gets put to work, it automatically goes right in the accounts. That money gets put to work. As that money gets put to work, what does it do? Well, that's more demand in the marketplace versus supply. Well, guess what? The way the markets are trading right now, we have more supply than we have demand, because if we had true demand in the marketplace, the breakout that the market has been trying to do for 6 months right now, it would have break topside, it would have wide price spread, it would have accelerated volume, would have all of the above. We don't have it. Each and every single time that we get up to this 2115, 2117 area in the S&P, guess what? There's monster sellers up there. Each time we get up there, volume dies on the ground, on the vine. Each time that we come downtown, what ends up happening? Boom, volume explodes out of the marketplace. That's distribution. Individual equities have started their markdown period, because when you look inside the S&P versus, you know, we're at highs, versus what has happened to some individual equities, well-known equities inside the S&P, including the large caps, it's problematic. We're at 2111 on the cash S&P. Anything under 2119.59 is saying we're going lower. This is Tom O'Brien. This is TFNN. Don't forget, 8 o'clock tomorrow morning, live at TFNN. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow.